Hello everyone, welcome to Oliveboard. In this particular video, we are going to discuss about the third part of the Financial Stability Report. So here we'll be discussing about the third chapter of the FSR report, June 2025. We have already completed the two parts of this report. This will be the third part. Before starting the discussion, I would like to tell you about an RBI Grade B preparation kit. We are offering this preparation kit that too free of cost, in which you'll be getting 10 PDF ebooks here. Complete guide for your RBI Grade B 2025 preparation, 100 plus economic and finance term PDF, RBI Grade B PYQ for the last 5 years, budget 2025-26, key highlights and MCQs. You will be also getting the AIR1's notes here, right? ESI and FM descriptive answer writing question and answers are also there in this particular ePDF books. And you can see that there are 10 PDF books in this preparation kit that can be definitely helpful for your examination. You can download the Oliveboard application. There you will be getting all the notifications related to all the YouTube sessions. We have also introduced the RBI Grade B preparation. This is a complete course with books. You will be also getting physically books here. Let's start with chapter 3, which is regulatory initiatives in the financial sector, right? We have done with chapter 1 and chapter 2. This is the chapter 3, regulatory initiatives in the financial sector. So we'll be discussing about what initiatives regulatory bodies have done in the financial sector in this particular chapter. So we don't have to remember too much data here, just the regulatory initiatives we should be having a good amount of understanding on. Let's start with the crux of the chapter. The global financial system faces mounting challenges from the trade tensions, cyber threat, climate related risk. In response to the global regulators are working to build systemic resilience through the strengthened Basel standards, improved liquidity management. So here are the major points on which we'll be having discussion related to Basel standards, related to liquidity management, cybersecurity, comprehensive climate risk framework. Domestically, the regulators are aligned with these efforts, focusing on digital fraud prevention, secure digital lending and mutual fund reform. So there are a lot of regulations that RBI bring day to day, and SEBI is also bringing regulations here. So we'll be discussing about those regulations as well in this particular chapter, right? So if you are going through finance current affairs, if you are going through the RBI circular videos that I'm frequently posting, you have already covered most of the things from this particular chapter. The Financial Stability and Development Council and its subcommittee continues to play a pivotal role in building the resilience and secure financial system. So this is the broad overview of the chapter. Let's now drill down and learn concepts one by one. First is growing economic uncertainties and structural shift. There are some growing economic uncertainties and there are structural shift in the global financial landscape. Regulators remain committed. Why? For enhancing the resilience and the global financial system here. Advanced measures to strengthen the system resilience to complex securitization structures, technology changes, cyber threats. So these are the broad things on which we are going to have a detailed discussion in this chapter, right? So again, cross border payments, climate related risk, इन सब पे हम डिटेल में डिस्कस करने वाले हैं. The first thing is global regulatory development के अंदर banking. Okay, so we all know that the Basel Committee in Banking Supervision, they are regularly reviewing the Basel III norms, right? So the latest Basel III monitoring exercise covered both large international active banks. So Group 1 is for large international banks, right? Active banks. And the other smaller banks, which is Group 2. So Group 2 here is for smaller banks, right? The result highlighted that for Group 1 banks, the NSFR. Now, can you guys tell me the meaning of NSFR? In the comment section, we have covered this particular thing in the second part, right? I have also told you the meaning of this particular ratio in the second part. So can you guys tell me the meaning of NSFR, the full form of NSFR in the comment section? So Group 1 bank, which are the large bank, NSFR remained stable. So it was stable. While the LCR, liquidity coverage ratio, decreased slightly. Okay, so that's the case of group 1. If I talk about group 2, which are small banks, they showed an increase in both the LCR and the NSFR, so they have shown an increase in both the ratios here, right? The BSBC also revised its principles for management for risk credit. So they have revised its principle for management for the risk credit. The updated principles here provide guidelines for the banking supervisor to evaluate the credit risk management processes in the 4 key areas. So as per the updated principles, there are 4 key areas in order to evaluate the bank's credit risk management process. So whether a bank is following an apt credit risk management process or not. So there are 4 key areas here. The first one is the establishing a suitable credit risk environment. The first thing you should be having is a suitable credit risk environment. Second is operating under a sound credit granting process. So your process should be very much sound here. Third is maintaining an appropriate credit administration, measurement and monitoring process. Your administration who is dealing with credit should be solid. Measurement and monitoring is a continuous process which should be always there. And the fourth one is ensuring the adequate controls over the credit risk. If any kind of credit risk is emanating, you need to control it. You need to place controls on it, right? Next is the financial markets. So if we talk about the financial market, then complex structuring and multi-layered distribution chain in certain securitization structure created a misalignment in the incentives between the originator and the investors, right? So they have talked about a securitization product which has created a complexity, rapid and largely undetected build up leverage and maturity mismatches were also observed. So as per the International Organization of Securities Commission, IOSCO, policy recommendations across the FSB jurisdiction and revised prudential standards for bank exposure to securitization in the residential mortgage-backed securities. So they are talking about the residential mortgage-backed securities and collateralized loan obligations, CLO. Basically what CLO is all about is they are grouping a bunch of loans. Basically a CLO is a structured financial product that pools together a large number of corporate loans. Let's suppose I have pooled a large number of corporate loans. Basically these are leveraged loans, right? Loans to companies with poor credit ratings, and then slices them into different tranches based on the risk, and then we'll be selling it one by one, right? So this is what a CLO is all about. So not yet a downturn as of now. The report has identified few issues of consideration of the national and international authorities, including the monitoring the risk in the securitization market. So the report has highlighted to monitor the risk in the securitization market, risk retention requirements in the CLO market. So there should be risk retention requirements also in the CLO market, that given a large portion of global CLO issuance remain outside the scope of these requirements. Next is the divergence in the reform implementation. So there are some divergences as well in the reform implementation. So these are the basic things on which this particular issues were highlighted by the organization, right? So that's for the principal side. So two IOSCO principles though. So principle number 6 and principle number 7. Principle number 6 is the regulator should have or contribute to the process to identify, monitor and mitigate and manage the systemic risk and appropriate to its mandate. So basically the regulator here needs to identify, monitor and mitigate any kind of systemic risk. Principle 7 is related to that the regulator should have to contribute to the process to review the parameter of the regulation regularly. So there is a provision that this principle is related to regularity basically, and this is related to continuous monitoring, right? So the overall compliance with principle 6, they have clearly stated that the overall compliance with principle 6 was generally high, okay, among the participating jurisdictions. So the compliance was quite high as compared to if I talk about the principle 6. Next is cyber attacks and technology failure have become significant threat to financial stability in the Financial Stability Report, there is a section of cyber resilience as well. Because of increasing digitalization, cyber security threat, cyber attacks, technology failure, they have started posing a significant risk, right? So the FSB has finalized a common framework here to promote the common information elements for the incident reporting while allowing the flexible implementation practices. So the format is called as FIRE, format of Incident Reporting Exchange, FIRE. Format of Incident Reporting Exchange encompass a broad spectrum of operational incidences, including any kind of cyber incidents. So they are basically focused on the cyber security norms as of now. And the model here is data point model approach. Okay. The model here is data point model approach. I have highlighted the major points from the report, right? So that you guys can later on download this PDF and have a quick reading as well. Next is related to climate finance. So FSB has introduced an analytical framework for assessing the climate related vulnerabilities as well. So they have introduced a new analytical framework for assessing the climate related vulnerabilities. There are three high level categories are there of the metric. First one is the proxies, second one is the exposure metrics, and third one is the risk metrics. So three high level categories are there. First is the proxies, second one is the exposure metric, and third one is the risk metric. The report also compiles a set of forward-looking metrics currently used by the FSB jurisdiction to monitor climate-related vulnerability. So they have also started using the forward-looking metric कि आगे आने वाले टाइम में क्या होने वाला है इसके अंदर, rather than being a lagging indicator, it should be a proactive indicator. So carbon earning at risk, this is also included. Climate beta and CRISK is also included here. The FSB has also released a report on the transition plan. So FSB has also given a report on the transition plan, like how the firms can incorporate the climate transition strategies, right? And their associated transition plans can support the financial stability as well. So they have given how to transition plans as well. The International Auditing and Assurance Standard Board has issued a new global sustainability assurance standard. Now guys, I know that it's a bit complicated. Language is also a bit complicated, though we need to remember this particular assurance standard. The International Auditing and Assurance Standard Board has issued a new global sustainability assurance standard, right? So in order to check the assurance in order to get the assurance that whether an entity has followed the global sustainability practices or not, they have issued a new standard, the International Standard on Sustainability Assurance, which is ISSA 5000. So please do remember this particular one. ISSA 5000, International Standard on Sustainability Assurance, right? This is designed to strengthen the global sustainability disclosure ecosystem, whether all the entities are disclosing the global sustainability requirements properly or not, right? So the ISSA 5000 contains a principle based requirements. So there are a lot of principle based requirement in this particular ISSA 500. It's nothing but a standard only. The standards are professional, agnostic, and framework neutral. They can be applied in relation to sustainability information prepared under any suitable sustainability reporting framework. So whatever sustainability reporting framework you are following, you need to make a disclosure as per ISSA 5000. Next, they have highlighted that what kind of other initiatives for domestic regulator authorities are being done, what are the kind of benefits they have given for Indian rupee for cross-border settlement. So internationalization of Indian rupee has been done in this particular year. Use of Indian rupee for cross-border settlement. We all know that Reserve Bank introduced a special rupee pass-through account. Now, if you are following the finance current affairs and the RBI circulars, majority of the things are already covered. The special rupee pass-through account framework. The RBI has released a special rupee pass-through account framework. Again, The use of INR was further strengthened by the notification of the Foreign Exchange Management Act related to how manner of receipt and payment will be done. Settlement of cross-border other than involving Nepal and Bhutan. So if you guys remember, I have covered a particular circular related to ACU mechanism. ACU mechanism. If you are doing any kind of transaction, cross-border transaction other than Nepal and Bhutan, so we need to do it as per the ACU mechanism, right? We have covered it on the YouTube as well. So this was again a crucial update related to the use of INR for cross-border settlement, right? Then memorandum of understanding has been signed between the central banks of UAE, Indonesia, Maldives, Mauritius to promote the local currency settlement. Liberalized FEMA framework, overseas branches of authorized dealer banks. Then non-resident entities may utilize their balance to in their repatriable INR account again. The Indian exporters are also now permitted to maintain foreign currency based abroad for account abroad for receipt and payment of proceeds and use them for the payment of imports. So they have basically specified each and every initiative they have done around the internationalization of rupee, right? Next is related to prevention of financial and digital payment fraud. So we all know that digital frauds that are all-time high as of now. So Reserve Bank of India has again taken two major approaches. The first one was changing the domain of the banks to bank.in, right? This was a very crucial update from Reserve Bank of India. They have changed the domain to bank.in. So this will definitely reduce the risk of phishing and cyber attacks. Phishing attacks, you know, we have discussed in this particular circular. Next step was to mitigate the misuse of the mobile numbers by the customers by the fraudsters. So fraudsters are misusing the mobile numbers of the customers, right? So by directing the regulated entity to undertake transaction and service call and any kind of promotional call via using a specific number, right? Like 1600x66, 140x66. So they have given a series of the numbers through which the regulated entities will contact. Next was related to project finance. So RBI has released project finance directions as well. We have already discussed it in a very detailed manner on our YouTube channel. Next was the amendment related to liquidity coverage ratio. So we all know that in case of an increase in the liquidity coverage ratio, it's good, right? So increase in the liquidity risk due to usage of technology. The Reserve Bank of India has undertaken a calibrated amendment. This is important. Now Reserve Bank of India under the LCR framework has introduced additional run-off rate factors. Run-off rate factors. Additional run-off rate factors, right? So we have discussed that if you have deposited in the bank using net banking, right, or mobile banking, then an additional runoff factor will apply to that kind of deposit because it's easy to deposit. It's easy to withdraw as well, right? So that's why RBI needs to implement here a additional runoff risk factor to these kind of deposits, right? Next, RBI has again released the directions related to digital lending, right? So we have covered the digital lending directions as well. They have introduced here two measures for arrangements involving the lending service provider partnering with multiple regulated entities. So we know that a lending service provider like Paytm, they can partner with multiple regulated entities. So how they need to manage it, RBI has clearly specified this thing, right? And for creation of directory of digital lending apps, so whatever digital lending apps they are using, they need to clearly specify that thing as well, right, as per the circular. So this is nothing but a compilation of all the RBI related and SEBI related news. I can say the key major amendments that they have taken in order to enhance the resilience of the financial system as a whole. The second measure aims to aid the borrowers in verifying the claims of the DLA's association with the RE. So if any DLA has any kind of association with the RE, so borrowers can definitely verify this thing as well. Next is related to forward contracts in government security. So we all know that RBI has again allowed the forward contracts in the government security. So to further develop the market of interest rate derivatives and forward contracts in the government securities have now been permitted. Such forward contracts will enable the long-term investors such as insurance funds to manage their interest rate risk across the interest rate cycle. So this particular circular we have also studied earlier related to the foreign contracts eligibility in the government securities. Next was related to introduction of the mutual fund light framework. So again, a light touch regulation regime. So we all know that in order to open a mutual fund company, there are a lot of regulations that we need to follow, right? So this is a light touch regulation regime for passively managed mutual fund scheme. If you are not managing a actively managed scheme, but you are just managing a passively managed fund, just like Nifty 50, right? There is no fund manager in Nifty 50 because it just need to be replicated with the benchmark, which is none other than Nifty 50. So any index fund, any passively managed fund based on a benchmark can follow this particular kind of framework, right? So exchange traded funds and fund of funds, it's quite easy for them to now start this mutual fund with lesser regulations than earlier, right? Then SEBI has also introduced the SIF, Specialized Investment Fund, and we all know that it is because of bridging the gap. There is a gap between the mutual fund investors and the portfolio management services. In order to bridge this gap, SEBI has brought this SIF, Specialized Investment Fund. What else was there? So identifying the unclaimed asset. So any kind of unclaimed asset is there, then again related to the framework related to this was particularly being published by the RBI. System audit of stockbrokers through technology based measure. This is a SEBI circular that we have covered. So here they have mentioned about each and every initiative that RBI has undertaken, right? And SEBI has also undertaken. So access to the negotiated dealing system, order matching, NDSOM platform for trading in government security, right? Retail participation in purchase and sale of government securities, intraday monitoring of position limits for index derivative. So these circulars we have already studied multiple times in the classes and on YouTube as well, right? So if we have a look at the other development, then for customer protection, majority of the complaints which are pertaining to the loans and advances and credit cards, they were constituting approximately 30 and 18%. Here we can see that loans and advances ka share in 2025 is 29+%, close to 30%. Credit cards ka is close to 19% here, right? So these are the complaints in the office of the Reserve Bank of India Ombudsman. So it's also highlighted in the Financial Stability Report. If I talk about the deposit insurance, DICGC cover, the current deposit insurance limit is 5 lakh rupees, right? So 97.6% of the total number of depositor, we are talking about the number of deposit accounts here, right? So 97.6% coverage is there in the DICGC. However, if I talk about the total value, then as of now 41.5% are covered in terms of value, which is less, I will say, right? Which is less. This needs to be penetrated. So this particular limit of 5 lakh needs to be enhanced for that. Insured deposit ratio was higher for cooperative banks followed by the commercial banks. So even if I talk about the insured deposit ratio in commercial bank, we can see that it's 40 around. For cooperative bank it is 61, which is very well above the commercial banks. In commercial banks also, PSBs, public sector banks, are having a higher IDR as compared to the private sector banks. Okay. Deposit insurance fund. Again, the deposit insurance fund recorded a 15.2% year-on increase as compared to the previous year. Then if I talk about the corporate insolvency resolution process, CIRP, we all know about the IBC, right? Insolvency Bankruptcy Code. So CIRP is nothing but a process of insolvency here, corporate insolvency resolution process. 76.8% have been closed. 76% of the cases have been closed related to CIRP. So these are the broad things that we are discussing. Here we can also see that resolution to liquidation ratio is on an uptrend, right? Resolution to liquidation ratio is also at 1.9, which is quite above the historical data. If I talk about the developments in international financial service system, so they have also seen a surge in the regulatory practices, in the registration practices. So the monthly turnover on the GIFT IFSC exchange was $95.3 billion. That's huge in 2025, right? March 2025, whereas the average daily volume of the Nifty derivative contract on the NSE International Exchange was just $4.53 billion US. If we talk about the pension funds, again, the National Pension Fund NPS and the Atal Pension Yojana, they are steadily growing, right? With the both increase in the subscriber count as well as the asset under management. So number of subscribers and AUM, asset under management and number of subscriber, both are on a uptrend only. Okay. Now they have given you the asset class bifurcation as well. So majority of the asset class is in G6 and SDLs only. So 54% is in the G6 and SDL, then in the corporate bonds, and third in the equity. And you can see here an uptrend in the subscriber, number of subscribers. If we talk about the AUM trend, again it's on a uptrend only. So it's good for both the schemes here. Then if we talk about the insurance, again a steady growth in the premium was noticed. Why? Because of the driving factors such as increasing in the disposable income, regulatory reforms, and improved ease of doing business and greater public awareness about the insurance. Now insurance is also a part of financial inclusion only, and in India still insurance penetration is required, right? The total insurance premium collected by the life insurer increased to 8.7 lakh crore from the 8.3. Earlier it used to be 8.3, now it is 8.7. So there is a steady growth of 5.2% as of now. New business premium of life insurance industry, again the growth rate was seen at 5% here. If we talk about the life insurance versus health insurance, so the health insurance sector segment has experienced a significant growth of 9%. So we can say that health insurance is growing at a faster rate than the life insurance, right? And if I talk about the initiative, then IRDA has also introduced a new facility called as Bima ASBA. Bima ASBA. What is ASBA? Application supported by blocking amount, right? So जो IPO वाला ASBA होता है वो हमने बीमा के अंदर भी अप्लाई किया. In this particular news we have also discussed in the finance current affairs, right? And then we are having some annexures like systemic risk survey. So again it was the 28th round. The RBI Bank's systemic risk survey was conducted in May 2025. So they have concluded that the systemic risk survey, all the major risk group were perceived to be medium risk category only. So all the major groups were under the medium risk category. So this particular yellow highlighted color is nothing but medium risk category. So even if we talk about the global risk, macroeconomic risk, financial market risk, and institutional risk, all were under the medium category only, right? So macro and financial risk have moderated due to inflation and monetary easing. Whereas if I talk about the other two, then that was there is a marginally increase only. Okay, the increase was just marginal only, not too much if we compare with the previous data, right? Next, they have stated about the methodology as well. So they have stated a term banking stability indicators, BSI, and what kind of ratios they are using in order to compute this BSI indicator. You can have a look. Soundness, for soundness they are using CRAR. For asset quality they are using gross NPA to total advances. Profitability, there is a return on asset. Liquidity, liquid assets to total assets. Efficiency, cost to income. Sensitivity to market risk is RWA. So they are using these ratios, so you should be having a good understanding of the topic ratio analysis as well, right? If I talk about the macro stress test, the stress test encompasses the credit risk, market risk, and interest rate risk, right? Credit risk, market risk, and interest rate risk. So these three things are included in the macro stress test, right? So guys, broadly, this particular chapter is more of the initiatives that RBI have taken in this particular period of time, right? That we can see that they have brought the forward contract in government securities, they have strengthened the digital lending directions, they have brought the project finance directions as well. So this particular chapter is more about knowing what kind of initiatives are there rather than just crunching the numbers, right? So this particular chapter ये थोड़ा सा simple है as compared to the other two chapters. So that's the conclusion of this as well. So thank you so much. We'll be soon bringing the MCQ session on the financial stability report for you guys as well. Okay, and SEBI notification is out, so if you are applying for it, all the very best for that, right? आप अपडेटेड रहिएगा हमारे यूट्यूब चैनल पे, वहाँ पे हम काफ़ी सारा कंटेंट उससे रिलेटेड भी पोस्ट करने वाले हैं. ओके, सो थैंक यू सो मच, बाय बाय, टेक केयर.